Apple finds itself at the center of trade war headlines after U.S. President Donald Trump announced a threat to impose a 25% tariff on all iPhones and other Apple devices made in China. This move aims to pressure CEO Tim Cook to shift production to the U.S. and has been widely reported across mainstream and financial media. Trump's message was that Apple must bring jobs back to America or they'll face high tariffs. This tariff ultimatum dominated news cycles, targeting one of the world's most valuable companies and escalating U.S China trade tensions. Investors and journalists noted that Apple's stock and other tech shares fell amid renewed tariff fears, reflecting Apple's outsized influence on market sentiment. The tariff threat strikes at the heart of Apple's supply chain. Apple assembles the bulk of its products in China, so a 25% import tax would significantly raise costs. Although Apple has been diversifying its manufacturing in recent years by expanding production in India and Vietnam, China remains its primary hub for device assembly. The company is already grappling with supply chain challenges and rising component costs, so additional tariffs would be a major operational hurdle. No immediate new product launches were in the news, but Apple is on the cusp of its annual developer conference, which kept rumor mills active. The spotlight remains on how Apple might respond to Trump's demands. As of now, Apple has not issued an official response to the tariff threat, though in the past, Tim Cook engaged directly with the Trump administration to secure tariff exemptions. The company's careful global manufacturing strategy is being tested by sudden political pressure. Wall Street analysts quickly weighed in on the tariff drama. Many agree the stakes are high. A 25% tariff would force Apple to either absorb the costs, which would hurt margins, or pass them on to consumers, risking demand, one tech analyst noted. Analysts estimate such a tariff could raise iPhone prices by $100 to $200 per unit, a cost likely to dampen sales. Several analysts highlighted Apple's options, from accelerating its supply chain shift out of China to potentially seeking price concessions from suppliers, but they also expressed skepticism that Apple could reorganize production quickly. Some market commentators frame Trump's threat as a negotiating tactic. Apple might avoid the worst-case scenario if it can appease U.S. policymakers with promises of more U.S. jobs or investments, as it has in the past. In general, however, the analyst's tone was cautious. Any prolonged tariff could trim Apple's profit margins and iPhone demand in the coming quarters, a risk now being factored into forecasts. The tariff threat is the major regulatory news for Apple, underscoring how political risk has reemerged for the company. The proposed 25% import tax is part of a broader trade and industrial policy agenda by the Trump administration. It represents a potential government action that could directly impact Apple's business model. Apart from tariffs, there were no major new legal actions against Apple in the last 72 hours. Trade policy was the key regulatory storyline. Trump's stance marks a sharp escalation, even compared to prior U.S. administrations. Critics warn such tariffs could backfire, raising prices for consumers and straining relations with key trade partners, but the White House appears willing to leverage Apple to achieve its Made in USA ambitions. Apple's past lobbying successes suggest it may seek a political solution, but until then, the regulatory risk looms large. Apple's news is reverberating beyond just the company. Any threat to Apple's business tends to weigh on the broader market. Indeed, the renewed tariff worries contributed to a risk-off tone in tech stocks overall. Companies with similar China-dependent supply chains, like electronics peers and chipmakers, saw their shares react in sympathy as investors gauged who might be next in the crosshairs. This comes amid a fragile time for markets. Investors had been cautiously optimistic about easing inflation and stable interest rates, but a trade war resurgence injects new uncertainty. In Apple's sector specifically, the tariff threat highlights how geopolitics can impact product pricing and competitiveness. Apple competes with other phone makers like Samsung, which was implicitly referenced by Trump, who lumped other smartphone manufacturers into the tariff warning. If Apple were forced to raise iPhone prices, it could temporarily give an edge to competitors not facing U.S. tariffs. Conversely, Apple's scale means it has more means to absorb or work around tariffs than smaller rivals. In summary, Apple's headline saga is not only a company story, but a macro story. It encapsulates the intersection of tech and trade policy, and markets worldwide are watching closely.